Hey guys, how's everyone doing? This is Nick from forexnoobs.com with the daily analysis. Today is Thursday, the 15th of November, 2018. Time is 11 a.m. here in the UK, and you're looking at a Forex calendar. Announcements first. I've said this at the start of every webinar for the last 6 or 8 webinars or whatever, but I'm going to say it again. Final trading day of the year for me is tomorrow. So this is the final webinar of the year, the final analysis webinar. There's going to be other types of webinars, especially for members. You guys are going to get a bunch of webinars. I am also going to do a public webinar in December, but this is the final analysis session, analysis webinar for the year because my trading year ends tomorrow. The reason for this, and I know that I've said this a million times, but I'm going to say it again for those who haven't heard. At the start of every year, I set a goal, a target that I want to hit. When I hit that target, then I reward myself by giving myself 8 weeks off. That would be from halfway through November to halfway through January. I hit my target a few months ago. A few is a bit of an exaggeration, but I think it was September. Anyway, it's not important. I hit my target. So I am going to be stopping my trading in November, basically tomorrow. And I'll be resuming probably on the 14th of January. Now, for members, this does not mean that there won't be content. There just won't be analysis. There's still going to be some forum analysis for you guys, by the way. For members, there's going to be forum analysis. Now, that analysis is going to be posted by George, but he's going to run it by me first. So I'm going to make sure that that everything is in line with my expectations. So it's not like I'm totally going to disappear for the next 2 months. That's not going to happen at all. There's going to be webinars for members. There's going to be more content released because instead of trading, I can focus on creating videos for you guys, which is what I plan to do for the next 2 months. And there's still going to be some written analysis, probably twice a week on the forum, posted by George, but I'll be double checking to make sure that I agree with his analysis. So, yeah, that's the announcements. Now on to the news. What news is happening today? I don't think I ran this by George. I think I've sprung it on him just now that he's going to be doing analysis, but he'll be fine. Maybe I did run it by him. I can't remember. He'll be fine. So we got retail sales. Retail sales is, yeah, I mean, it can have an impact on the market, but I'm not too worried. Unless we're trading the lower time frames, I'm not too worried about retail sales. So if you're on the 1 hour chart, then retail sales can have a big enough impact. But on the daily chart, they can technically have a big enough impact, but it rarely happens unless they're way off consensus. So I think we'll be fine in terms of retail sales. But this one is a bit of a concern. Fed Chairman Powell speaks. He spoke last night. He's speaking again tonight, it would seem, a bit earlier. Due to speak about Hurricane Harvey recovery efforts. I mean, this is probably not going to have an impact on the market. It could. You never know. But to be honest, Powell has been pretty decent at not saying stupid things. So I think for news, we're just going to be fine. Tomorrow morning, we got Draghi speaking, or however you say his name. That could be a bit impactful. But I think there's a good chance that we're not going to see much impact from news on the larger timeframes like the daily chart. Well, yeah, Brexit, as always, it's going to be impacting GBP for a while because GBP has been pretty much all over the place due to Brexit. A lot of the moves have been quite easy to predict, with a few exceptions. Let's switch over to the actual charts, though, and I'll show you what I mean. So that short that I shared last Thursday, for those of you who are still in it, ended up working out quite well thanks to Brexit news. I obviously closed out where I said, which was around here. So I didn't hold on to this one. But, you know, you can obviously say that it was probably wrong not to close out. But it's so easy to say that with hindsight. After it's moved down, you can say, oh, yeah, you should not have closed out. But the reality was we were seeing the market kind of stalling out at this level. It had stalled out around here in the past, and it had hit my target, more importantly, my initial target, before it started stalling out. So I was actually considering leaving this one open, though, truth be told. I think I talked about this. I was considering leaving this one open, but to be completely honest, had I left it open and it pulled back up to here and then it went back down and then it went back up, I probably would have decided to close out at some point, just because it would have been jumping around too much and I wouldn't have liked it. GBP CAD, not the best end of the last week of the year for me, to be completely honest. I did get some profit on GBP JPY, but GBP CAD, I got stopped out with, I tightened my stop loss from the original. So the original was about here. I halved my stop loss. But had I held on, this one would have worked out too. But again, with hindsight, it's easy to say, well, if you held on, you would have made a bunch of money. But holding on through all that Brexit news where the market's just going crazy, up, down, you know, it's not that simple, really. So yeah, that Brexit news is causing some pretty crazy moves. And it probably will for the rest of the year, really. Maybe even going into next year. That doesn't mean GBP is untradeable. It just means that you got to trade with care. Like, obviously it is tradable because we took trades there last week, held over the weekend, and for most of us, they worked out perfect. Well, obviously not perfect. I don't know why I said perfect. I'm sorry. Obviously they didn't work out perfect. I just explained how they didn't work out perfect, but they worked out well. We were looking at our initial targets, and they were hit. Because most of you did get out on GBP CAD. Most of you didn't hold on like I did. So most of you got out with some profit on GBP CAD. I obviously took a small loss, but whatever. But a lot of you closed out for the weekend, which was probably the smarter move overall. I just guess I felt like taking a bit of risk this weekend. And it looked like it was working out well for me come Monday when it gapped down. But obviously, in the end, it didn't work out that great, but whatever. Anyway, point is, GBP, I'd be careful for the next, until the Brexit stuff is over. So for the next 3 or 4 years, I'd be careful with GBP. But that doesn't mean we can't trade it, guys. Euro AUD. Why do I have this marked? Oh yeah, someone took a trade here. Oh yeah. Sorry, it's just come back to me. Yeah. This was the one I skipped because of how how bad the risk to reward ratio was, but I think Ash entered this one and maybe someone else entered. We were talking about it yesterday. Obviously, to those who entered, that has continued to move down, so that one didn't work out too well. AUD New Zealand. Yeah, the problem with retrace entries, Edward, is... Alright, basically, I'll explain something that I think a lot of people miss when they're thinking about retrace entries. Because I think a lot of you guys and a lot of people, a lot of new traders, not you guys specifically, just a lot of new traders, they want to get into trades. So they'll see a retrace as a great opportunity to get into a trade, which it is in a way. But also you got to consider what that retrace means in the context of the specific setup you're looking at. And I explained a bit about this yesterday in the analysis. So a retrace entry in this specific situation, what does it mean? It means that we got a push from buyers that pushed up, broke the high of the previous candle, or even broke the high of this candle. And did it break the high? No, but it broke the high of this candle. And then it sunk back down all the way to here. It lost all of the gains it's made, the small gains, which are breaks of the highs, but still small overall. It lost all of those gains. So that doesn't really inspire much confidence in buyers at that point. So this is not saying that I never enter on a retrace. I enter on a retrace, but the retraces I tend to enter on are quite small. This is a pretty big retrace overall. Price has made new highs beyond 2 levels. It hasn't even managed to move that much before it falls all the way back down to where this candle opened. And in relation to the previous candles, it's a medium-sized move back down. And the most important factor here is that you've got a massive bearish trend here. Massive, strong bearish trend. Now, quickly going back to the analysis I did on Monday, where I said I was considering taking a trade here. Obviously, on Tuesday, I said I was considering taking a trade here. Obviously, as this developed, I decided against taking a trade here, which I explained yesterday. Obviously, before it moved down, I explained that I'm not going to be taking a trade there because despite the retrace entry, blah, 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 I just didn't like it because of risk to reward ratio. But and I also explained that I didn't like it because it was a strong bearish trend and the buyers weren't inspiring much confidence here. With retrace entries, you shouldn't use them as an excuse to get into a trade that has really bad risk reward ratio and that's really risky. Because overall this trade was quite risky. And entering on that retrace, for some of you, I get a feeling might have been an excuse to get into a trade that you probably shouldn't have jumped into anyway, because it was too risky for most of you. And we brought this up, I brought this up on the forum the other day with the EURGBP trade, I believe, where I was looking at EURGBP on the daily for a long, and a bunch of you entered on the 12-hour, I believe. And I asked you guys, why did you enter on the 12 hour? Was it because you really wanted to get into a trade? You were looking for any reason to get in? Or was it because you were willing to accept the risk of trading on the 12 hour? And I feel like a lot of you will sometimes jump into a really risky trade just because you really want to be in the market, and you ignore a lot of the warning signs telling you that this trade might be too risky. Because I think even on Tuesday when I mentioned this, I said, I'm checking this one out, but I don't like it because it just looks really risky. Pretty sure that's what I said on Tuesday. And then obviously on Wednesday, I reiterated that more strongly. And if you decided to get in because you were totally understanding the risks involved in this setup, and you accepted those risks because you're more willing than me to take risky trades, that's completely fine. Because in the end, it was a acceptable setup, even though it was risky. And I'm not talking to you if that was what you did, because you know what you're doing. You've accepted the risk and the trade didn't work out. That's completely fine. I'm just talking to the people who got in when they probably shouldn't have been in. The people who aren't following their plan, who are getting in out of fear, who are getting in without really thinking through all the risks on this setup. That's who I'm talking to. But anyway, I think we're going to do a webinar on this because I think it's a good subject for a webinar. You need to be able to distinguish the difference between entering out of fear of missing out and entering because you are following the rules of your personal trading plan and the rules say it's okay to get into this trade. Because one is fine and the other is obviously not fine. Yeah, Zila. That's why I feel a lot of you, especially the newer guys, are jumping into trades. Because I do notice it's usually the same people who are jumping into trades where I'm like, all right, that is technically a trade setup, but are they understanding the risks with this trade setup? Where this one was pretty risky. And I've been, I was pretty apprehensive about entering it myself. And I ultimately didn't. But guys, I just realized it's 20 minutes in and we're still talking about the third pair on the list. Let's just wrap this part up by saying we'll do a webinar on this. I'm going to write it down in my notes. One sec. I'm not sure if this is going to be a public webinar or a members only webinar. I might make this a public webinar because I think it's something that everyone will benefit from. And yeah, so let's move on to something more interesting. We'll look for some actual setups. AUD New Zealand. Yeah, we were looking here. What were we looking for yesterday here? Was it a continuation? I can't remember. Probably, because it looks like it broke below by a fair way yesterday. Yeah, so it looks like a continuation is happening, especially on the smaller timeframes here. it is a very strong bearish trend here on AUD New Zealand. Prices tried to get a backup of, so let's rewind a little bit. AUD New Zealand, strong downtrend. Price has broken this massive support area. And it tried to push back above, and it's failing right now. We can see it's failing because of that long wick. So there is definitely potential here to get into a short continuation trade. This is not a very significant low that it's broken, but, you know, it's the lowest it's been for roughly 6 months, give or take. So it's a somewhat significant low. Price push below, come back up, stalling out. Yeah, I mean, there is potential here on the lower time frames. I'm just trying to figure out where I would, because I'm okay with trading this on a lower time frame, but as I always say, the lower you go, the more you risk getting a fake setup. And I think this is where a lot of people get sucked into fear of missing out, because already price is moving down on the 8 hour. So you might be thinking, if I don't get in now, I'm going to miss out on this continuation. But what I'm thinking is I want to get in at a safe point, and if I miss out, I don't really care, because at least I'm not losing money. So I'm trying to figure out if I'm going to take the risk of entering on the 8 hour short, or maybe when this 8 hour candle closes, which is not too far away. Six hour, you could technically say you're getting in. 4 hour, you could be in already. Where's your pending, Zila? Below the 8 hour. There's definitely some potential here for a continuation. It's a strong bearish trend. Good risk to reward ratio with your entry. I am personally going to wait for things to clear up a little bit. I'm not against trading this on the 8 hour, but I at least want this 8 hour candle to close. I want to see price stalling here for more than just the 4 hours or so it's been stalling here already. So yeah, let's keep a close eye on this one, guys, for a continuation. It looks pretty decent. I want to see price stalling out here a little bit on the 8 hour. I might enter on the 8 hour or the 12 hour or the daily. Doesn't it's hard right now to have an exact point of entry and an exact stop loss for myself, because I'm not sure yet how I will handle this, but I am definitely looking to get into a trade here. So we'll keep an eye on that. EURUSD, we got a similar situation. Price has broken below a support area. Price is stalling up at this area. This is a more significant low. So this is a low price hasn't seen since July 2017. So this is over a 1 year low that EURUSD has made. And now it's pulling back up and stalling out at the support that was just broken. Overall, I guess you could say it's trending down, although that pullback did look like the trend might have ended, but no, overall it's still trending down. Yeah, there's potential for a continuation here too, guys. Bit of a messy one, but definite potential here too. So I'll be looking for a continuation on, you know, the 8 hour, the 12 hour, something like that. Yeah, I see what you're saying. The RR is, the risk to reward ratio is not great right now, but if I were getting in, I'd be looking for an entry further up towards the top of this resistance area. I think, again, we talked about this on yesterday's analysis. I can't remember which pair we were talking about exactly, but I was saying, I'm pretty sure it was a continuation that I'd be looking for an entry closer to the top than I would down here, just for the better risk to reward ratio. So if this pushes up right now, back into this area, we could definitely be looking at getting a better entry here. That will give us a decent risk to reward ratio. Right now, the risk to reward ratio is a bit iffy, but definitely one to watch because it is a nice strong downtrend. It has broken some very significant lows. So there's potential to get into a good short trade here. A short continuation of this overall bearish trend. Euro New Zealand is hitting a major support area, showing signs of stalling. Is it a really strong support area on Euro New Zealand? It's a low that we haven't seen in quite some time. Last time it was October, so pretty much a yearly low. Very close to it. No, just over it actually. What am I talking about? October is gone. So yeah, it's over a 1 year low. Price has hit this support area. Yeah, stalling out on the lower time frames. Keep in mind, this is an extremely strong bearish trend. So if we're trading a reversal of this, we're countering an extremely strong trend. Very risky. I want to see price stall out here, and then we could look for a potential reversal. So there is potential to trade a reversal here, but keep in mind it is an extremely risky reversal. Don't want to just jump in blindly. USD JPY, nothing much going on here, guys. USD CHF, potential for a continuation here too. But this one's a bit riskier. This one's actually really risky. I'm probably not going to do anything with this one. AUD CAD. Yeah, it's stalling out at a pretty significant resistance area. Also the 200 moving average, which is also a resistance area essentially. So yeah, let's keep an eye on this. Look for a short from here. Has potential. Short reversal. Yeah, let's look for a short reversal. I want to see price stall on this resistance area. New Zealand USD is headed towards this resistance area. This could be interesting. I want to see what happens at this resistance area. Hope is that it would cross the resistance area and then give us a continuation. I probably won't be trading that because it's going to take too long and my trading year will have ended by then. But do keep an eye for a potential continuation here on New Zealand USD. Nothing really on that. Nothing really on AUD JPY. Nothing really on AUD USD. Euro CAD, nothing. Euro GBP, that's a pretty big candle. Keep an eye on this, guys. This could give us a nice reversal. whenever you get a big candle like this based on news, there's great potential to trade a retrace. So keep an eye on that for a retrace, guys. But I'm not really that excited about EURGBP. I don't know why I'm moving these up the list. GBP AUD, similar situation. It's had a sharp move down, so we can keep an eye on a potential retrace type reversal. GBP New Zealand has had a strong move down. It's not sitting on support though, so. GBP USD also strong move down. Let's see what happens when it hits the support area, but it's not there yet, so let's not worry too much about that. New Zealand JPY headed up to a strong resistance area. Might get a reversal there, but yeah, I'm not that interested in that, to be honest. USD CAD has just started moving sideways for the last 3 days, so I think that wraps it up for the analysis so far, guys. Got quite a bit of stuff going on. AUD New Zealand potential short continuation. Going to wait for price to stall out on this resistance area. Euro USD, same situation, potential short continuation. I'd prefer to see price go further up into this resistance area. Looking for price stalling out on that resistance area there. If it stalls out, we could be looking for a short. We could be looking at a short continuation. This one's probably not going to happen until later today on the smaller time frames. But if you're trading the dailies, probably not until tomorrow. AUD New Zealand looks like it's closer to triggering. Euro New Zealand, we're just looking at what price is going to do on the support area. If it stalls out heavily on the support area, like it looks like it's already doing, we could be looking for a long trade. AUD CAD, it's at a strong resistance area. It's also at the 200 moving average, which is another resistance area, basically a self-adjusting resistance area. So if price stalls out on this resistance, we could be looking for a short reversal trade. We're going to wait and see if price stalls out. You can even look at the lower time frames. I mean, on the 8 hour, it's already stalling out. It's a strong bullish move right now, so countering it is a bit risky, but there's nothing wrong with trading counter to strong bullish moves or strong trends, essentially, especially if your targets are reasonable. New Zealand USD, I'm just waiting for price to hit this resistance area to see what happens here. Last time it was here, it formed a bit of a range for a little while. It'd be interesting if it forms another range between these two areas. Euro GBP has pushed up and is hitting a strong resistance area. Also 200 moving average, so doubly strong resistance. These moves caused by news, they tend to retrace pretty quickly. So there is potential to get into a short retrace here. Probably on the lower time frames. But obviously right now it still looks like it's going up. So you don't want to jump in short right now. You want to wait for some indecision. And for price to stall on the maybe 6 or 8 hour. GBP AUD, very similar situation. Price has fallen down into the support area. So we could look for a retrace reversal on some of the lower time frames. So 6 hour, 8 hour, something like that. We're already seeing signs stalling on the smaller time frames. But it hasn't really been stalling very long. So, you know, at least wait for a 4 hour candle, guys. Maybe even a 6 hour, maybe even an 8 hour. Don't just blindly jump in. But these retrace moves, they do tend to move kind of quick. So if we are going to get a retrace here, you probably don't want to wait for the daily, because if it retraces, it's probably going to retrace by then. Are there any questions, guys? Uh, the AUD movement because of the employment rate. The easiest way to see it is to just drop down to a small time frame, 1 hour or the 30 minutes, see the exact time it happened, which was 12:30, and then compare it to the calendar, which is exactly when it came out. So, yeah. What about it though? Your AUD could start from there. I don't know what you mean by your AUD could start from there. No, I know what trade you're talking about. When you say start from there, do you mean that you would have got stopped out because of that news? Yeah, I mean, all right. When I see this a lot with new traders, when they get taken out, they look for reasons that the trade didn't work out. Because I'm not saying that this is exactly what you're doing, because I don't really know. I'm just saying it could be what you're doing, and I see it quite a lot with new traders. When a trade doesn't work out, they start hunting for reasons as to why it didn't work out. And they'll say, oh, well, it didn't happen. It didn't work out because of the news. So I didn't really make a mistake here. I didn't enter a trade that was against my rules. I didn't enter. Again, I'm not saying this exactly about you because I don't know what exact rules you're entering to you're using and what your exact risk tolerance is. For you, this trade might have been worth the risk, but I'm just saying more in general. They'll look for reasons that the trade didn't work out, and then they'll say, well, it wasn't my fault. It wasn't my mistake. It was because of news. It was because Powell said something. It was because Trump said something. It was for whatever reason. But I don't really think that's helpful in learning to trade. And if you're going to take the approach where you ignore most news, because which is essentially what I do, because I've found that ignoring it most times it'll be beneficial to me, and ignoring it has a positive impact on my results. Ignoring everything except for speeches and the absolute major stuff, then you can't just use news as an excuse for a trade failing when it suits you. If that makes sense? Because you're accepting that you're going to ignore news. You've accepted, okay, I'm going to ignore news. News isn't a factor in my trading because I've run the numbers and then I've said, okay, news overall doesn't have that big of an impact. If anything, it's positive for me. So I'm just going to ignore most news. And then when a trade fails, you're like, it's because of the news. So I'm not going to look at what I'm doing and decide if maybe I should have even been in that trade because news is a convenient excuse. So just be careful with that kind of thinking. Just be a little bit careful with that kind of thinking because it could be a hindrance to your progress as a trader to write this specific setup off completely because it was news, so I didn't do anything wrong. Because maybe you didn't do anything wrong. Maybe this trade fits perfectly within your rules. And that's fine. Like I said, like I've already said, that's fine. But I think, I feel that a lot of you entered this trade out of fear of missing out on a move when you saw it spike up. And if you really stepped back and looked at the trade, like me, you would have said, maybe this one's a bit too risky because the risk to reward ratio is atrocious. And the only way I can make the risk to reward ratio even remotely stomachable is by entering on a retrace. And what that retrace means is that that spike up is already pulling back, which is a bad sign when I'm trading against such a strong trend. You didn't follow your plan. So your plan is to avoid major news? And why didn't you follow your plan? Like, why didn't you see it? You forgot, you got distracted by something else, which, you know, it happens. I'm not saying that I don't make mistakes in my trading. You guys have seen me make a bunch of mistakes. I can't remember my mistakes, all of them, but I think last month even I made a pretty big mistake in my trading. So you guys see me make mistakes. I'm definitely not perfect. But there are a few things I do that allow me to avoid most of the mistakes I would make when I am distracted or when I am tired or whatever. And it just comes down to having a very simple checklist. And I actually built a tool for this for you guys, and it's a tool that I use. It's going to be turned into an actual mobile app probably next year, because I'm looking to have a bunch of these tools turned into mobile apps. But I feel, why isn't it on the list here? That's, something's broken there that needs to be fixed. But anyway, the trade checklist tool. And if you're logged in to Forex for Noobs, then you can personalize this tool. You can add specific things to it. Check AUD news. Obviously, you're not going to get that specific because it's more of a generic list, but just as an example, you can phrase it as a question. You could do whatever you want, and then it's going to save it as your own personal checklist. So when you refresh the page, when you do whatever, it's going to save it as your own personal checklist. And then once you check off all the items, you're good. Again, this, why is it like that? It should have a better look in. Anyway, it doesn't matter. Yeah, always ask who's in control of price. This the generic checklist is not that great. But this tool is going to be updated very soon. I'm currently using the updated version, which is slightly different to this version, and it's being turned into an actual mobile app. But for now, this version, it has pretty much all the same functionality. It's just slightly not. It's not as polished as the new version. But don't worry about that. Point is, you can add whatever you want to this list. You could reset it back to default if you want. You can even sort these things in order of whatever order you want. So I think this is going to save you a lot of trouble with your trades, because if before entering that trade you were looking at this list and ticking it off, And then one of them was, is there major news coming that may impact this trade? And you have not ticked that because obviously you're going to check it when you read that. You check it and you're like, oh, there is major news. I might not enter that trade. It's just having a simple trade. You don't even have to use this tool. I mean, I put this tool up because it's a project I'm working on that's going to get better and better. But you could just have a notebook with a checklist. You know, you could print them out if you want. If you're up for wasting a ton of paper. Just print out like 100 of them and you've got enough to last you a good 3 months, 6 months, however often you're taking trades. But just use a simple checklist. And it's going to save you a lot of trouble. Fair enough? But yeah, we'll do a webinar, guys, on FOMO. Yeah, Zila, I think it's important. I think like a lot of people rush into trades because they don't want to miss out. And I think one of the most important lessons, well, no, there's a lot of important lessons. I guess it's one of the most important that I've learned over the years is to just chill out and take it easy. Because at the end of the day, missing a trade is a lot better than getting into a bad trade and losing money. Because the number one rule in trading has always been the same. The number one rule is don't lose money. Protect your capital. That's what traders are doing. It's not about making money. It's about protecting the money you have primarily. Then after that, you consider making money. But first of all, you protect the money you have. And chilling out and not just blindly jumping into trades, that all serves the first rule, which is protect your capital. When you jump into trades out of fear, you're breaking the very first rule of trading. You're risking capital. You're putting your money at risk when you really shouldn't be. It definitely comes with experience, guys. I'm not saying it's easy. I completely understand that it's not easy. I mean, I was in this position like 12 years ago still. And at that point, I think I'd been trading for like 14 years. What am I talking about? For 4 years. You know, it took me a long time, even though psychology was always my strongest suit, it took me a long time to fully just chill out and be like, yeah, whatever. If I miss a trade, I miss a trade. Yeah, Warren Buffett says that, but it's not only Warren Buffett. If you look at quotes from pretty much all the top traders that have ever existed, they all echo the same thing. Paul Tudor Jones, I can't remember all the names, but Paul Tudor Jones is an amazing trader. And he has said a bunch of times that his number one rule is not to lose money. Don't risk your capital. Don't lose money. That's what trading comes down to. It's all about not risking your capital, because when you lose money trading, it becomes harder and harder to make that money back. Because let's say you start with 1,000, just because it's an easy number, and you're making 10% per month on that 1,000. Again, we're just using easy numbers. You're making 100 per month. Now, if you lose 200, you're then still making 10%, but now instead of making 100, you're making 80. And the more you lose, the longer it's going to take to build back up to where you started. The more you lose, the longer it takes to build up to where you started the month out. I mean, this is essentially why we don't want to lose money as traders. Because the more that you lose, the harder it is to gain back. So your mindset always needs to be protect my capital, protect my capital, protect my capital. And that's why I was like looking at this trade thinking, yeah, I'm not too sure. The risk to reward ratio is not great, a bit risky. I don't want to enter this one. And I didn't get sucked into entering because it started pushing up. I didn't say, oh no, it's pushing up without me, I'm going to jump in. Because a lot of the times when it pushes up, it'll go back down. It happens quite a bit. What I've learned from losing $1 million. Check it out. Hopefully there's an audiobook of it. I tend not to read these days. I just find that reading is a bit time consuming because you have to sit and read. But audiobooks, you can do whatever. Like I listen to audiobooks when I'm out running. I listen to audiobooks when I'm like cleaning the house, doing whatever. Audiobooks are just so good. Oh, there is an audio version. 1 credit on Audible. Nice. Yeah, audiobooks are like the best. And podcasts. Podcasts have pretty much changed my life. Joe Rogan podcast. He has so many interesting people on there. Jocko Willink's podcast. Not changed my life in terms of trading, but in terms of fitness and health. But that obviously has a knock-on effect to your trading. It has a knock-on effect to everything in your life, really. Yeah, man, you're doing pretty good. I was happy to see a post, your post at the progress update. You're really coming along, man. Well, this webinar kind of went off on a tangent, but I guess that's good for our last webinar of the year. I feel like we discussed a lot of different things here. But I need to get going, guys. Speaking of fitness, it's time for my run, or probably a long walk today. I was doing squats and deadlifts yesterday, so my legs are gone. So I'm probably gonna go for a fast-paced walk instead of a run, actually. But yeah, this is the final webinar of the year, guys. So obviously you will be hearing from me, but there just won't be any video analysis for the rest of the year. So yeah, been a good year for me, and I think it's been a good year for a lot of you. I am off to Belgium in 2 weeks. So there'll probably be radio silence around that time. For probably 2 weeks, there's going to be radio silence for 2 weeks, essentially. because as I've said, and as people have just mentioned, my partner, her sister's having a baby, and it's the first of the kids that are having a baby, so it's going to be a big thing. So yeah, I'll catch you guys around the forum, and see you guys later. Thanks for attending. Bye bye.